And as we're doing so, I will go ahead and just give some brief statements even before Ms. Janine actually joins us. She will actually be presenting this evening. Her name is Ms. Janine Hunter. The reason I chose to have this particular seminar tonight, as many of you may know, that upon being elected in 2019, I entered a partnership with Operation Hope. And through that partnership, we have created a financial dignity program. And through RBC Bank, we award down payment assistance and home loans to first-time home buyers through that program. We literally work with individuals where they are. It is very important to note that 85% of all wealth, particularly in the African-American community, is directly linked to home ownership. So in instances where you have a lack of home ownership, you find that in many instances, there is no wealth within those households. I won't go into the disparities that are often associated with race and socioeconomics, but one of the quickest ways to change the trajectory of an individual is through home ownership. Also, of course, since the pandemic in 2020, we have seen a far more challenging market for home buyers. This evening, will talk about the rise in interest rates, but most importantly, more and more homeowners are not competing, even in residential communities that are R100, with individuals. They are often competing with Wall Street, LLCs, and private investors, as we have seen a boom in the BFR market, buy for rent. This particular market focuses around corporate entities that are purchasing homes in residential communities. And of course, they then lease these homes. And in many instances, we are changing the dynamics of community structures as we have known them. So, as people come out of a global pandemic, many have seen changes in income. And it's really important that we have programs that will facilitate home ownership. Through my previous program, we offer 100% down payment assistance up to $250,000. But if you live in South and unincorporated DeKalb, in many instances, it is extremely difficult to find a home that is $250,000. Many homes now, even modest homes, sell at a price point of $300,000 or more. So you all know me as Lorraine Cochran-Johnson, your Super District Commissioner. But beyond that, I am here to create home owners and provide programs that you need so that our communities do not change and you are able to purchase. So this evening, through the P.A.T.H program, there are opportunities to own, and it offers 100% financing to individuals who qualify. Because oftentimes the greatest challenge to home ownership is the down payment. So at this time, I do believe that Ms. Hunter is present. I see here her number. So I'm going to go into her bio, and then we're going to toss this conversation over to her. And I urge those of you who have taken the time to join us this evening to reach out to our office if you have additional questions. My only concern is ensuring that the residents of DeKalb County have a right to the American dream, which is home ownership. The last point that I'll make is many of you may be aware, particularly if you are in real estate, because I do see some real estate agents who have joined us. In 2021, we saw a 21% rise in rental rates. And last year in 2022, we saw a 15%. So over the course of a 2-year period in Metro Atlanta, we have had a 36% rise in rental rates, while individuals have not seen a rise in their income. And the GDP, the gross domestic product, is not rising at the same rate as rental rates. And for the average person, which we will talk about that this evening, your home should not cost more than 30% of your income. So what we're creating for many people is an unlivable living situation. And in the state of Georgia, to compound the problem even greater, because of the official code annotated of Georgia that prohibits the state's ability to interfere with a landlord's right to set his or her rental rate, we can't stop what we see. Across the United States, Georgia is in the top 10 for rental rates. Out of that top 10, currently 6 of those states have rental rate caps, meaning that a landlord cannot raise rent on average more than 5% year over year. The most stringent rental rate cap is currently in St. Paul, Minnesota, and that's at a rate of 3.5%. So as your commissioner this year, as a part of my legislative package, I did ask those individuals who are under the gold dome to please consider repealing the code that prohibits us from setting a rental rate cap, because we are pricing people out of home ownership, particularly working class people. So this evening, my conversation will be with Ms. Janine Hunter. Janine began her career in the mortgage industry in 1993 as a loan officer at Household Finance Corporation. And in 1995, when the industry exploded, Janine became a mortgage banker for various companies until she joined Indianapolis Downtown Real Estate, where she worked as a licensed realtor and mortgage originator, serving underserved communities for over 10 years. When the market changed in 2008, Janine went to work for FHA Resource Center as a customer service representative, but was tasked with fielding questions from underwriters, appraisers, loan officers, loan originators, and consumers. It was during this time she developed the ability to help buyers navigate FHA-specific loans, and in the process, she learned the ins and outs of what it takes to successfully take an FHA loan from application to closing. Janine has also had the opportunity to process loans, act as a due diligence reviewer, and assist a loan officer before moving into a senior loan officer role. Her extensive experience in these different areas of the mortgage industry means that she understands the loan process from beginning to end and can guide her clients and navigate them through the entire home loan purchase process. Outside of work, she's passionate about youth and community. And for over 25 years, she was a lead facilitator for the Center for Leadership Development, where she taught life skills training through their flagship program called Self-Discovery Career Exploration Project. And professionally, she's an active member of the National Black MBA Association, the Atlanta chapter, the Gamma Phi Delta Sorority Incorporated, and she's also a member of the DeKalb County Women's Council of Realtors. And I would like to say at this time, thank you so much, Ms. Hunter, for joining us this evening. I look forward to having the conversation, and I look forward to creating resources for DeKalb County residents so that they have the right to purchase homes. I am fully committed to that goal. So at this time, I'm going to turn the floor over to you.
Good evening, Commissioner Johnson. Can you hear me?
I certainly can.
Good, because we've been having some technical difficulties. Thank you from the bottom of my heart for the opportunity to share with you and with DeKalb County residents the P.A.T.H program. You mentioned in your intro the disparities as it relates to homeownership for African American communities. Right now, that number sits at 44 to 45%. Whereas when we look at the majority communities, they are at 70 to 73% homeownership rate. So as you can see, there is a significant room for improvement for us to become homeowners. But more importantly, when we look at the wealth gap, and what we mean by that is, how much do we leave as far as a legacy or an inheritance for the next generation?
Mhm.
For African Americans, it is approximately $10,000. For majority communities, it's almost $100,000. And for us, the most significant way that we can pass down generational wealth is through homeownership, but through our own misconceptions, our own fears, and the dynamics of the market, because they do play a place in that, that has prevented us, a lot of us, from the opportunity of homeownership. So that's why I am so excited that we are having this conversation this evening, because the P.A.T.H program is one of many tools that a constituent can use in order to obtain home ownership. I do have a PowerPoint that will be available for your constituents. I'm going to go through that PowerPoint, and I encourage everyone, if they can, to ask questions. I am on here via phone, but if someone who is monitoring the chat can stop me, then I will answer any questions as we go along the way. Is that okay with you, Commissioner Johnson?
Absolutely. And let me add, because I believe in being extremely transparent, because oftentimes we don't have the conversation. Many times, some of the conversations that I have with folk in the community, even though the problem exists, no one has ever acknowledged it in a formal way that sits in a position of authority with government. So I wanted to say to you all, even before becoming a commissioner and working in my capacity with the Atlanta Daily World and managing newspapers, I just wanted to point out that around 2010 to 2012, home ownership in the African American community had reached the lowest point since the Great Depression. And also, for those of you that are a part of this call who may be real estate agents, and of course, Ms. Hunter, with you working in the market, you understand the collapse of the housing industry in 2008. And
yes,
of course, during that time, those loans that had been given, primarily focused on Black, brown, and underserved communities in low census tracts. So there was a shift in the dynamics of those communities, and many individuals lost their homes. So for me, it's very important that I give people good and credible information so that we are able to truly make a difference here. Because even here in DeKalb County, although I'm not at liberty to talk numbers, we settled a lawsuit that related to the redlining and issues associated with 2008 and the economic downturn. Because of course, government operates from tax revenue, tax dollars. So when there was a massive loss of homes in DeKalb, because DeKalb was one of the hardest hit counties in the state of Georgia, we lost a massive amount of revenue. So we have a long way to go in terms of making up what many people have lost. And I just can't say to you enough how important home ownership is. And it's a conversation that I charge everyone on this call to go back and have in their communities, ask their neighbors and even young people, do you own a home? And if not, send them to me or provide them with guidance, because we have to change the trajectory of our communities. So with that, I'll be quiet and turn the floor back over to you, and we will make this thing work. As my mom would say, it works if you work it, despite the technical difficulties. And thank you for understanding and persevering.
no problem. So how the program works, it's called the P.A.T.H program. is as long as the house is in a low to moderate census tract or in a census tract that has greater than 49.1% minority, and it doesn't necessarily have to be Black. It can be Black, brown, Asian, whatever, but if the composition of the community is 49.1%, the house qualifies the borrower for 100% financing, which means no down payment, as long as you have a 640 credit score, or if you do not have a credit score, then I can use your utilities, your cell phone bills, your car insurance, juniors, AAU payments, anything that I can utilize to substantiate a 12-month credit history. We can use that in order to get you qualified for this program. Now, with that being said, the three things that prevent most African Americans from purchasing a home is credit, its down payment, and its savings. So this program was designed in order to address those issues. So if you have a 640 credit score, that's great. But if you have no credit score, then we can use the 4 trade lines. Again, rent, which everybody's paying rent, utilities, whether it's electric, whether it's water, whether it's sewer, cell phone, car insurance, juniors, AAU payment, whatever we can use to establish a 12-month history, we can utilize that for this program. This is for owner. Yes.
I wanted to say to you, because of the technical difficulties, I've looked at your entire presentation and we currently have you on slide 3. As you need us to advance slides, we're going to need you to tell us so that what we're showing is in sync with your discussion.
Okay, no problem. So as Commissioner Johnson mentioned, affordability is 30% of your housing expense coming from your gross monthly income. This program has that we can be somewhere between 31 to 35%. And how we come up with that number is we take your annual salary and we divide it by 12, and then we take 31 to 35% of that. House plus debt can be no more than 43% of your gross monthly income. So again, we take your annual income divided by 12, take 43% of that, and again, this program requires that total debt structure be 43. Next slide, please. So as the realtors can attest, and I hear this every day, a lot of people are on the fence about buying the house for many reasons that they do not have control over. And what I mean by that is low inventory. Atlanta is a strong market. We have significant numbers of people moving into this market on a daily basis. So a lot of them have the money to afford the houses. So that's why we're starting to see an uptick of the houses staying on the market a little bit longer. But again, we're getting into purchase season. So there is the possibility for us to go back to a market that we've experienced for the past 2 years, where stuff goes on the market and it comes right back off again, even with these interest rates. Purchase price, again, as Commissioner Johnson mentioned, we've had significant appreciation in our real estate purchase prices in the last 2 years. A lot of that has been driven by the fact that there is low inventory. Unfortunately, interest rates have risen since really the end of last year. Actually, it started the end of 2021. It went to 2022. We started to see the interest rates go up, but they have really escalated within the last 90 days. And in fact, we've been told that we can expect further increases in the interest rates just because of the fact that inflation is not cooling, meaning that cost of goods are still high, We're still having some supply chain issues. We still got the money from the stimulus packages, even though people spent that money a long time ago. That is still within the marketplace. So that is what is affecting the interest rates. With increased purchase prices means increased property tax rates. The cost of insurance is going up. Closing costs are going up. And then, as Commissioner Johnson mentioned, rising rental rates. So these are things that borrowers cannot control, but these are the things that you can control. You can control your income. And what I mean by that, which is slide number 5, is that we have to have 2 years of continuous employment and no more than a 30-day job gap. A lot of people during the pandemic have chosen to take on having 2 jobs. That's fine. We just need to have 2 years of you working those 2 jobs in order for us to qualify, use that as qualifying income. And for my self-employed borrowers, because I do a lot of them as well, we have to make sure that the income that you tell Uncle Sam that you made is sufficient in order to qualify for the purchase price that you're looking for. So what I mean by that is that you can't tell Uncle Sam that you made $30,000 and expect to buy a $300,000 house. It doesn't work like that. So that's why you need to speak with a mortgage professional so that we can guide you through that process to make sure that you are declaring enough income to afford both the house payment as well as your current debt structure.
Now, one question that I have for you, I know if we could see each other, you could probably see me talking, but one question that I have about your program, because I want to make sure, because, I'm always out there looking for something to help the situations I see. But with your program, Ms. Hunter, is there a cap on the purchase price?
$726,900.
And I wanted individuals to hear that because by and large, most people are not out there in the market for a $700,000 home plus. But a lot of programs have caps. And your program, when I saw that number, was very attractive because as long as you meet the requirements concerning the debt income ratio, and all things are in place, you can purchase over 700,000 through this program, and some don't go that high. Now, another thing that I want to ask of you, because I want folks to understand that are a part of this call, that we have a variety of different products. That's what I call it. In District 7, I have products. If one thing doesn't work, there's another, or sometimes we have wraparound services. And I see your credit score. You can begin lending at 600, but you get the best opportunities at 640. Do you all have a program that works with people on credit repair?
Yes, ma'am, we do. I work with the borrowers and I get a lot of times the agents involved because that's how they come to me, is through their agents. What I do is what is called a credit simulation program, and I will manipulate the balances through the program that I have and give them a time frame. And provided that they are committed to doing exactly that plan, we can do what is called a rapid rescore that will allow their scores to be boosted to what the plan says, and then they could qualify for whatever program they're trying to qualify for.
Understood, because I also wanted to say that if you did not, one of the things that I'm not keen on for individuals who may have a challenge is enlisting or paying for credit repair, because all of the agencies that I'm familiar with who do a great job, they do not. So if you did not provide that service, and for anyone who may be listening still, who would be interested in only credit repair, we have a wonderful program also through Operation Hope. And in 60 to 90 days, we're seeing the credit scores rise 30 points on average. So just know, we treat this, as I often say, being a Southern Baptist, like the church. You come as you are. We meet you where you are. There is no shame, whatever the situation. We are here to help you be successful. So if we need to work with or on your situation, that's what we're here to do. And one other question, as these questions come in, I'm going to kind of put them out there. One person just asked whether or not the is the 777K salary limit firm. And I'm not quite sure, Ms. Sydney Johnson, what you mean when you say, is it firm? I didn't hear a $77,000 salary limit.
Right. There is, if you go outside of a majority minority neighborhood, or you go outside of a low to moderate census tract. So
Okay.
a majority of your area, Commissioner Johnson, is majority minority. So we do not have an income cap.
Understood. I got it now, and that's what I at a $750,000 purchase price. I know the type salary that would require. So I didn't think you had a salary cap. We're just looking for you to meet the minimum qualifications. Now, there is another question that is coming in from Miss Irene Maxon, and she said, are you able to participate in P.A.T.H if you sold your current home to buy a ranch style house, or it disqualifies you from being a first-time home buyer? According to your program, Ms. Hunter, at the time of purchase, you can have no other home. So if you've sold a home and you have no home, you should be qualified. Is that not correct?
That is correct.
Okay.
So
And
when I say we can do
one other question, Allison, I'm going to ask of you, because you know I'm very interactive. I'm seeing the questions, but I'm not able to type into the chat. So I think that's another part of the technical difficulty. But I'm going to try to answer as much as I can live, okay?
Yeah, Commissioner, that should have been rectified, that issue. Can you try one more time?
Okay. And you, Ms. Hunter, you go right ahead. I don't want to slow you down because I want us to get through this.
No problem. So as I stated, we can start lending at 600, but it is not my goal for my homeowners to come in at 600. And the reason being is that that is an FHA product, but your interest rate is at the highest cap, which means that that's going to impede your purchase ability, because I've got to decrease your purchase price in order to give you the higher rate in order to get into the house. So that's why I go through the credit counseling with the borrower to try and get them to the 640 credit score. Because if I can get them to the 640 credit score, then they will be able to qualify for the P.A.T.H program. Or if we have to do FHA, because their case, and this is what happens a majority of the time, is that people's case exceed that 31 and 43, then I can flip them to the FHA product or a conventional product, and the interest rate would not be as high.
And one other thing, we've had a question as to, is this program only good for single family residences? And I do believe that that was my request. So can you verify that this program is only good for single family properties, or does one have the capacity to purchase commercial through the P.A.T.H? I don't think you do.
No, this program is only for single family residences, 1-unit property. So it can be either a condo, townhome, or a single family residence. Mm-hmm.
Okay.
Now, savings. So how I typically structure this, and the market has been kind as of right now, is that if we can get the agents to negotiate a seller credit, then the most that the borrower has to come out of pocket is their earnest money, their inspection, and their appraisal fee. So we're talking about minimum costs for getting into home ownership.
Understood. And that's what most people need in order to move into home ownership.
So loan features, which is slide number 6, this is a conventional loan. And what I mean by that is that we keep this loan at our bank. We do not sell this loan to anybody. This is what is considered a portfolio product for us. With that being said, this loan does not have private mortgage insurance. And that is key because at a 640 credit score on a regular conventional loan, your mortgage insurance payment can be somewhere between 0.5% up to 1% of your loan amount, which again impedes your ability to buy the home that you want because the mortgage insurance is so expensive. Another key factor in this loan feature is that the rates are cheaper than regular conventional. So right now, as of today, and I said keywords as of today because rates went kind of crazy today, so I don't know if it's going to change tomorrow. But at a 640 credit score, the rate on this is 6.625. Now, people say, well, that may be a little bit higher. Yes, it's a little bit higher than FHA. But remember, there is no mortgage insurance. So even if I flipped you to a FHA product, yes, I could drop your rate a little bit, but then I've got to add that mortgage insurance. So it actually comes out to be better for the consumer to do this product. But we add even something else to this. If you open up a bank account with United Community Bank and you have the payment set up on auto pay, we will set up for you to have an additional quarter discount on your rate. So that same 6.625 rate can come down to about 6.375 just by opening up an account there with the bank.
Understood. Now, and I'm only going to take questions because I'm seeing other questions come, but several of those concerning student loans and bankruptcies are going to be discussed, so I'm not going to stop the presentation for those. But this, Ms. Ellis has asked, are you a preferred for some new construction builders in DeKalb? I don't know the answer to that, so I'm asking because are you all preferred or do you offer construction loans?
There's 2 types of construction loans that we offer. What she's referring to as far as in-loan financing for a subdivision, no, we are not on preferred builders lender list, but some preferred builders do have a similar product with a bank because these loans are always offered by the banks. They are not offered by the mortgage company. And then we do have a separate construction product where if a borrower owns the land, then they can do a custom construction, but that's a conversation for a different day because that's a little bit more hairy than what this program is.
I understand.
But more importantly, this loan can be layered with down payment assistance. So even though this loan does not have a down payment requirement, if the borrower qualifies for U-Advantage, which is our down payment assistance program, I can use that money to either make the mortgage more affordable or I can use the money to cover closing costs. But that program is income-based and it's based upon 80% area median income. So for first-time home buyers, they can receive up to $12,500 that we can utilize with this program, the P.A.T.H loan, and have further savings for them, limited funds out of pocket, could possibly get some money back at closing. If they are a medical professional, educational professional, first responder, or vet, then they can get up to $15,000. And we can use the money the same way, either to make the mortgage more affordable, or we can use it to cover closing costs or buy the interest rate down because there is the ability to buy the interest rate down on this product. So are there any other questions?
There was one question concerning employment, and I asked this because in the information that I've received, I didn't see this answer. But can the employment be within the same field, but a different employer?
Yes. So again, we are looking for 2 years of continuous employment. And a misperception in the marketplace is that a borrower cannot change jobs and then purchase a home. That is not true. We just have to document why the borrower changed jobs. I mean, if it's a situation to whereas you're getting more income, that's great, because that means you're a better fit financially to afford the home that you are wanting to purchase. Or if it's a situation where you changed fields, again, great, because you've got a degree now to substantiate you making that job change. We just have to write letters of explanation. And what I do for my clients is I write those letters for them because I know what the underwriter wants to see, and therefore it makes it a much smoother process for the borrower.
Understood.
So the next couple of slides are homes that were available for the program in DeKalb County. Commissioner Johnson, in your area. So there was homes in Decatur, Lithonia, Stone Mountain, and Stonecrest. We get a list of houses every week that qualify for the program. And the great thing about it is any house that meets the criteria that we talked about, being either majority, minority, or in a low to moderate census tract, even if it's not on this week's list, if it's still available, you can still get that house with 100% financing.
And let
So
me
then I want
say, to individuals, one of the biggest hurdles that many face in home ownership is the down payment. So what we're seeking to do here today is eliminate that down payment. Because when there's no down payment, oftentimes a renter can go straight from renting into, in many instances, home ownership, and the mortgage will be no more or less than what they've been paying in rent in the current market.
That is correct. So let's talk about the credit features. Someone asked about student loans. With this program, I can use the income-based payment plan. So I always tell people the greatest story is the story that I tell on myself. So I currently have $138,000 in student loans. That's for an undergraduate and a master's degree. I used the P.A.T.H loan in order to purchase my home this past December. So if I had used 0.5, they would have had a payment of approximately $640 based upon my balance of my student loan. But I applied for the income-based payment plan, which means I had to take it out of forbearance and deferment, set up the payment plan, which was $332, and they used that $332 in order to qualify me for the loan, and then I put the student loans right back into deferment. Because we just need a payment plan that states 12 months past closing what your estimated payments are going to be.
Understood.
So I always tell my clients, because as I said, I understand the student loan debacle. I mean, there are people applying for forgiveness. You know, until such time that actually happens, we have to take the balances based upon what is listed on your credit bureau. So the best way to be able to afford more house is to pull it out and do the income-based payment plan. We just cannot have a payment plan of zero because the underwriter will not accept that. So I always tell my borrowers, if you can at least get $10, we can use that $10 payment.
Understood.
So with bankruptcy, I actually closed a borrower in Lithonia last year. She was 2 years and 2 weeks past her discharge date of her bankruptcy, and I was able to put her in a house at 5.875 with this program, and the seller paid a portion of her closing costs. So with FHA, you have to wait, 2 years, but again, you have the mortgage insurance. With conventional, it's 4 years. With VA, it's 2 to 3 years. But again, only VA and this program will give you no down payment. The other programs, you have to put a down payment. The key thing is anytime you file a bankruptcy, you have to reestablish credit, and there can be no late since the bankruptcy. That's what we're looking for.
And one other thing I see here from Sincere Newman, can P.A.T.H work with CDBG programs? CDBG is Community Development Block Grants. That is a totally different program.
That is correct.
So no, you're talking about two separate products. And honestly, CDBG, I'm not familiar with them allowing the purchase of homes, period, Ms. Newman. So no, I don't want you to confuse this program with CDBG.
You cannot have any collections in the last 12 months unless they're medical, because we don't hold medical collections against anyone. But if it's Comcast or a cell phone bill, that will disqualify you. And again, we can use non-traditional credit to strengthen the file. If you don't have a credit score, then we can use a letter from your car insurance, your rental payments, your utility, cell phone bills, etc. So the next slide talks about the difference of renting versus owning, because I know when I talk to my real estate partners on a daily basis, they're always talking about, well, people want to wait. So on this chart that's actually in the PowerPoint, I did this based upon a person paying $1,500 a month for 2 years. And I did it as rent versus principal paid, meaning equity position in a house. So for $1,500 for 2 years, you would spend a net cost of $36,540, and you would have zero equity. If you purchased a home and did 3.5% down, you would spend $18, but you would have $28,000 in equity. If you did VA financing, you would spend $35,000, but you would have $20,000 in equity. And if you did conventional, you would spend $40,000, but you would have $30,000 in equity. So in every situation, it makes sense to be a homeowner, because as long as you continue to rent, you're never going to be in a position where you can pass down generational wealth to your family or get into a hardship and have a bank account, which is the house, that you can possibly refinance and pull out before your credit becomes to the point that you cannot refinance. And even though people have 63% of mortgage holders right now have less than a 3% interest rate, what we're starting to see in the market now is those people are coming back to us wanting to refinance because they've ran up their credit cards, and even at a 6 or a 7% interest rate, when their credit cards are 2021, it makes more sense for them to refi and pull the money out and pay off the debt, because that now becomes tax deductible. Whereas if it stays on the credit cards, their payments are high and they can't deduct that interest on their tax returns. So the next slide talks about interest rates. It talks about, in 1975, when I was 5 years old, interest rates were 9.17%. And then when I graduated from undergrad, they were at 5.77%, which is 2005. And in 2022, the interest rates were approximately 6.56%. So I tell people all the time, we are in a normal interest rate environment. It's higher than what it was in 2020 because of the fact that we had a catastrophic event. And that catastrophic event was COVID. So if you look at the previous catastrophic event prior to that, that was the collapse of the real estate market because of the foreclosures, which would have been right at 2010. And even at that point, the interest rates were 5%. So if you're waiting for that next, 2 to 3%, it's been tracking pretty much every 12 to 15 years. And look how much equity or potential for generational wealth would have been lost if, you had went ahead and purchased a home. You would be in a much better financial position. So the documents that are needed for pre-approval are 30 days worth of pay stubs, 2 years of W-2s and or tax returns if you are self-employed, 2 months bank statements, an HR contact for verification of employment, and a landlord contact for verification of rent. I always tell my borrowers, if you are organized with this process and you keep this documentation either in an old school 2-pocket folder, or if you're tech savvy, on an electronic folder, this will make your process for your loan officer and for your real estate agent much easier. But if we have to spend a lot of time, trying to figure out how to get the documents from you over to us, this is what can cause delays in your closing. Because the thing about it is, once we go under contract, we typically have 30 days to get you from contract to close. So we don't have a lot of time for lost opportunities because documentation is not readily available.
Understood. And let me also say hi. I see Jonas has joined. And of course, we have various communities that are in need of assistance. So Jonas, if this is a presentation that should be done within our Ethiopian community, please let me know. If you'll organize it, I'll have the conversation. There was a question that I saw that just came into the chat, and let's see if I can find it, because I do not, to my knowledge, this was not a question that I had seen. So yes, again, there is no max income, and technically there is no minimum, but when you qualify, what you qualify for is based upon 8% of income. So do be mindful of that. Again, we are experiencing some technical difficulties, so I'm not seeing some of the questions that I had previously seen. It looks like my chat has gone away. I'm going back to chat. We're going to try this a different way. And I'm back into the chat. And this question is, are you able to help someone that works a non-conventional job, contract work? And I can say she can, but you still have to have necessary documents. There's already been the conversation about having the ability to use some non-conventional methods that are reasonable, like certain payments for utilities and so forth to strengthen your file. But whomever your employer is, you really do need to be earning a paycheck or have some form of documentation, so to speak, of what your earnings are.
That is correct. So I do have actors, I've had truck drivers that I have closed on this program, and they're all 1099. So that's where the conversation comes in as far as having your tax returns done, because we have to have the conversation about, okay, if you want to buy a $300,000 home, then I need to have at least a 2-year trend of you making at least $55,000. And if the tax return, show that you only making $30,000, then we're going to have to either wait a year or you're going to have to amend your tax returns.
And let me also say there's a question concerning no doc loans. Are those available at higher credit scores? I do not believe the P.A.T.H offers that option. Is that correct?
That is correct. That is a non-traditional product. Yes, it is available. I do have a borrower who does have that, a colleague rather, who does utilize that program, but that requires a 20% down payment. And most of my clients do not have 5%, let alone 20%.
Right. And let me say, because I want everyone to have what they want, but we have to go about things a certain way. That's how we had the economic downturn of 2008, where people knowingly gave individuals products that they didn't need. So all of these balloons were out there and ORMs, and the income wasn't there. So let's work within the confines of something that is solid so that we don't have those types of issues. A delay is not a denial. We will work with you and get you where you need to be so that you're not going through those hurdles, but you start today and you complete the process.
I always tell my borrowers, the keys are in your hand. It's just when are you going to decide to put in the work to get them to your hands?
Mm-hmm.
So I spend a lot of time educating borrowers about ARM products. This product is not an ARM. It is a 30-year fixed rate. Management came to me and asked me if I wanted to put an ARM on this product, and I emphatically said no, because I know what happened in 2008 when my community suffered the largest depletion of wealth based upon home ownership, because these properties went into foreclosure because they were on ARM products. To this date, people are still scared to buy homes, even though they lost them 12, 13 years ago because of that experience. So I will never consciously put a person into that product. That's not my MO, because I want you to be in a home and stay in the home. I don't want the house back.
Absolutely.
And so that's why we're very adamant about making sure that we stay within these ratios. But again, for most people, the first complaint I get, or comment I should say I get, is that I don't want to live in a hood. Well, I hate to break this to you, but a majority of us are living in the hood anyway. We just don't know it. So going up to $726,000, you're not going to be in the hood. You're going to be in a decent neighborhood, but your neighborhood is what you make of it. And for a lot of people, I'm telling them right now, just to where we are in the economic cycle, I just need you to get in where you can fit in and ride this out. Because when you're coming in with minimal amount of money, and as I said, this is a no down payment program, there's not a lot of room for you to get what you want. But if you get into this house and do what the plan says, over 2 years, 5 years, you will have some money, hopefully a boost in income that will help you to be able to get to that next level house. But most people want the 5-bedroom, 4-bath house out the gate. And just based upon where purchase prices are and where interest rates are, we may have to start at the 3-bedroom, 2-bath.
Understood. And let me say that the key to real estate is making sound decisions and building equity. And oftentimes smaller homes and homes that may require just a little bit of an investment can be your better option, because there will be incidentals. Home ownership inherently comes with additional responsibilities and cost. And we are not here to max you to your limit, because again, we want to see you successful. So let's have the conversation. Let's start somewhere. And of course, if you make a wise decision given time, there should be the equity that at some point you can move into the next home. So thank you for making that statement, because I'm a huge advocate for making wise decisions. We absolutely have to do that now. And I'm just dismayed in many instances by what I see in the market, because when it comes to, particularly in certain pockets of DeKalb, along Candler Road in the Tony Valley area and certain other areas, you're seeing LLCs, Wall Street, and private investors come through, purchase homes, and immediately, they're purchasing on the low end, because literally they're very aggressive with the owners. And I have had seniors say to me, when I came walking up just to tell them, if you have problems or if you face an increase in your tax assessment, then you need to call us, because I had become aware that we had seniors who were fearful they were going to lose their home. So they sold it to these predators, not realizing that as a senior, as a veteran, or as an individual who is disabled, if you are able to show that your income has not changed despite your property value increasing, because all around you gentrification is taking place, then you contact our tax assessor, your property assessment is frozen. It doesn't go up. So I don't want people to have the ability to create hysteria and steer individuals due to a lack of knowledge into a life-changing situation where in some instances I found not even the children were aware that the parents had created a reverse mortgage where they were told, well, you can stay here until, and we won't take possession until your death, and we're going to give you $10,000 right now, and we're going to give you $500 a month. But when you're talking to a person that's already in their 70s, their life expectancy ain't much. So when you run the numbers, they just swindle this person out of a home for probably $20,000 that has a value of $300,000 to $400,000. So I've seen a lot of things going on in the marketplace. So the reason I have this conversation is because someone has to do it. And someone has to work with community to ensure that we have the best outcome. And with that said, the timing here this evening has been absolutely perfect. I see the request for the presentation. Allison, I'm going to ask that you place this on our website. So if you will visit CommissionerLorraineCochran-Johnson.com, then you will see this presentation under, I believe the area is called My Initiatives. Just put it there, and you will be able to access it. But you have this evening, Ms. Hunter, given us valuable information. Anyone who is looking to purchase a home without any down payment, without anything out of pocket, this program is a solution for you. Again, the website where you can find the presentation is CommissionerLorraineCochran-Johnson.com. I do apologize for the link, but again, Commissioner LorraineCochran-Johnson.com. And I do see here that Ms. Jones has indicated the median sale price in zip code 3032 is $335,000 as of the end of February. And that's why when you look at the costs that are associated with down payments, in many instances, it is keeping people out of the marketplace because they simply don't have it. And especially with what they're paying in rent, they don't have the ability to have the capacity to save a down payment. So this was my attempt to create options for people who simply need help. We've got to get you, if you are on this call and you are renting, we've got to make you a homeowner in DeKalb County. We can't continue it. We have to work together.
Commissioner Johnson, if I can, in closing, I would like to say, because I am a bank, or I should say I work for a bank, our minimum loan amount is $50,000. So if there are people out there who, need home repairs, we have the ability to lend them money to do those home repairs. A lot of mortgage companies have minimum loan amounts, but we do not.
Okay, understood. So that's very valuable information again. And to all of you that have taken the time to join us and stay with us throughout this call, I thank you. We're just here to be a solution. If, as an elected official, if we're not about community, then what are we really about? So with that said, are there, to my team, to Allison Slocum, who handles our marketing, and she is our district manager, and my chief of staff, Dr. Davis, thank you all so much for the time and care that you put into everything we do here in District 7. I appreciate both of you for being with me on this journey. And Ms. Hunter, are there any closing remarks for you?
Yes, my closing remarks would be that, stop letting fear rule your decision. Just talk to me. I will be very transparent with you and tell you exactly what you need to do, because remember, I'm your advocate. I am standing between you and those keys. So if you're willing to put in the work, I've worked with borrowers for 2 years and we got them into a house. So I'm just as committed, because I truly believe that this is my God-given purpose. And I'm willing to work with you if you're willing to work with me. And even if you decide to work with another lender, I can still help you. I just want us to have home ownership, because again, that is the way that we pass down generational wealth.
That's right. And at the end of the day, it is so important that we pass down generational wealth and we have access to good information, to credible people who can assist us after analyzing what the situation is, because it is very unfair what we see right now in the marketplace. For many years, for decades, home ownership has been seen as the American dream. And honestly, it is becoming a dream deferred for many people, because they are stuck in a cycle of perpetual renting as a tenant, because they plain and simply cannot afford a down payment. So just know that there are products out there and there are options out there for you. The P.A.T.H program is one. If we have some challenges, again, we're going to work through them expeditiously. And honestly, I've seen people that have come to our office within a matter of months, no more than a year, who were then ready and were able to progressively purchase despite initial challenges. And that's what we're here to do. So with that said, home ownership does matter, Ms. Jones. Thank you to everyone who joined us tonight. And again, have a good evening. Go and enjoy your families.